Hey, welcome to Be the Boss of Your Money. It's Mitch, and I'm so glad you are here to join me. Couple of things to go over. It looks like stock market looks like it wants to go down. We started to talk about this yesterday that investor sentiment went from way extreme negative to way extreme positive really fast. And as you can see, it was a contrarian indicator. Stocks went up. When investors are negative, in basically the major surveys, American Association of Investors or something like that, when they're negative, it doesn't tell you that, oh, they're going to sell stocks. It tells you that they already are negative. So when someone says they're negative on the stock market, take it with a grain of salt. They've probably already sold their stock. And I'm not saying that everybody does it for some nefarious reason. It says they're negative because they are just, hoping that you'll sell and stocks will go lower and they'll get in at better prices. You really can't manipulate the market like that. Even the biggest investors, it's just there's too much going on, too much of a big truck to push. I just think that as a contrarian indicator, when, for example, investors say they're optimistic, I'm not talking one person, I'm talking like a wide ranging survey of lots of investors and they're very bullish. That usually means they've already invested their money and they don't have much money left in the sideline, which means stocks have already gone up as much as they can. And then there's no place to go but down after that. That's the overly simplified contrarian play of investor sentiment. And long term, it doesn't really matter. Companies are going to continue to find ways to make more money. They're going to continue to find ways to get the price of their stocks higher. They'll make acquisitions, they'll do mergers, stock buybacks, dividends, cost cutting, whatever they could do. So, welcome here, John Martucci's out there. Hey, man, I'm doing fine. Thank you very much. How are you doing, John? Thank you very much for joining me. You know what? I wasn't sure if we were going to be able to stream to LinkedIn today, but apparently we are. And thank you, John, for joining me. I really appreciate that, and I hope you're doing well too. So here's what I'm going to do. I'm just going to throw up a quick banner here. I'll just run the quick intro. We're going to talk about a couple of things, but I do want to touch upon something we haven't done in a long time, because a while back I talked about Bitcoin ETF. And I was really negative on it. It was based on futures, and I did a whole expose on it. And we were right to be skeptical about it. But something changed, and I think we need to quickly talk about it. It's not much to say, but I think you should just be aware of it. So here's the intro. I'll be back in like 20 seconds. All right, welcome back. So we're having a pretty good year in the market so far, and everybody just wants to know what comes next. What should I do now? The winners have been enormous, especially when you're talking about large cap tech stocks. We talk about these all the time: the Nvidias, Microsoft, Meta. I feel like I still have to say this, but Meta used to be called Facebook. Now Facebook is a division of Meta, and Meta means metaverse, to show Facebook's newfound focus on the metaverse, of which they're now scaling back. So maybe they'll go back to changing the name to Facebook. As a matter of fact, I think if Meta would go back to changing to their old name to Facebook, that could probably be worth a couple of percentage points in the stock. Just for that, probably it'll indicate that the company is refocused on their core business, which works, which is cash flow, advertising, and competing against Google and eating the lunch of every other social media company that dares to come up with a business plan. So market's off about 102 points. I'm going to avoid showing you the screen right the second. It's just, the Nasdaq finally backed off a little bit over 1%. Stocks that have been winning the most have finally come down, and it's hard to say if this is going to be a severe profit taking episode that maybe brings the Nasdaq down 2 or 3%, or if is it something more. We'll find out very quickly, though. But it doesn't really change the concept for me that I'm a long term investor. I don't buy stocks for the short term. Uh, Nvidia was down over 50% last year. So when you see it up 200% this year, it's a huge winner. But kudos to all of you, all of us who held on and stuck with it through thick and thin. But we don't want to get carried away. And if you want to sell Nvidia, here's how, or any stock that's up a lot, here's how I talk about selling with clients. Now, I manage client assets. I manage their portfolios. I'm the one who makes the decisions of what to buy, what to sell, and when and how. But when someone calls me, like a good friend of mine called me with some pretty big gains in Nvidia, wanting my opinion, what should he do? Now, this is not my client. So what should you do? I mean, it's really like unanswerable. I mean, yeah, it's always easy to say, well, you should take a little off because it's up a lot. But I have to give you a better answer than that. That's like, that's basic. Basic is okay. We always say back to basics. But to me, it's how much of your overall investments does that position, what percentage of it is it of your overall position, of your assets? How would you feel if it went down a lot? And if it did go down a lot, that probably means that if Nvidia went down a lot, it probably means that Microsoft and Meta and Google, they'll probably all be going down at the same time because these stocks typically trade as one. How would you feel? I wouldn't feel so good if I gave a lot back. Okay, that tells me something. Then you have to say, do you need this money? Like, is this money that you need in the near term or intermediate term? Well, I might. I mean, you never know. There's a couple of things I want to do. I want to do this in the house or send my kids to school soon. Well, that's a different story because now your time horizon is pretty short. So now you have a short time horizon. You'd feel pretty bad if the stock went down and you gave back all these incredible gains. And I want to ask you, would it impede your ability to do the things you need to do to meet your financial obligations over the next, let's say, year or two, if this stock and the other tech stocks were to take a big dip like they did last year? And the answer was yes, that would. In fact, things are so bad last year, I was thinking about putting off retirement for a few years. Well, now that tells me, should you sell a stock with a 300 or 400% gain? Don't sell the stock because it's up 300 or 400%. Maybe it'll go up even more. We don't know. But based on, making this a decision based on your personal finance, that tells me, in that case, that person needs to sell a portion of the stock. It could be a significant portion. It could be all of it. But that's a person who what I just described to you, answered affirmative to those questions. That's a person who should be making their choice based on their personal finance. Don't make the decision based on where a stock has gone or how much it's up or down, because you don't know what's going to come next with the stock. An up stock could keep going up, a down stock could keep going down. Make it a matter of personal finance. That matter of personal finance. It's cool to do that, right? So those are the kinds of conversations that I have with people. Now, for clients whose assets I manage on my own, I put myself in the shoes of that particular client, of that client's account that I'm in now. I'm on my computer. I'm looking through all the stocks, and some stocks are up huge this year. Accounts right now are hitting basically all-time highs. And should we take something off? And I put myself in the shoes of a client because I know about their risk tolerance, their time horizon, their goals. I know when they need the money. I know how they feel about risk. I know how they feel about making money, giving it back. And based on all that, I decide in their best interest whether I should sell little of a stock, a lot of it, all of it, or none of it, based on their personal finance. And I think that's the way to make a decision on whether if you should sell a stock, not just because it's up a lot. NVIDIA was up 100% not too long ago, earlier this year. Now it's up 200%. Who's to say it can't be up 300%? We don't know, but I know this. Your personal finance dictates what you do. And if your time horizon is still very long, you don't need the money. It's not a big, you could ride out volatility. Maybe this is going to be a high tax year, so you want to wait till you're in a lower tax year. Whatever it is, there are reasons to wait. So, obviously, if the stock goes down 50% again next year, someone's going to say, oh, I told you should have sold it. But maybe it'll be up 500% the year after. We don't know. And that's the thing. Let your personal finance dictate what you do. This is why I say, instead of worrying about the price of a stock, for a lot of you, index funds that track the major averages, are usually a pretty good idea. So you don't have to worry about the stock. You just worry about the asset classes. You can't invest directly into an index like the S&P 500, but you could invest in a security that tracks or mimics the performance of the S&P 500. So those are some of the ways that I think about selling a stock or even buying a stock. How do you sell a stock? Well, we could talk about limit orders, that sort of thing, but I really want to get into the Bitcoin. So Bitcoin has been trading around 26, 27, 28,000. It finally broke out up just a little over 2,000. It hit $30,000 per coin today. Why? Because BlackRock is the largest asset management firm in the country. They have something like $8.5 or $9 trillion under management. And they make exchange traded funds, mutual funds, just a massive money management complex. And they have an excellent track record of getting the ETFs that they apply for approved. And if BlackRock says something's a good idea, this is not some no-name group that's trying to open up an ETF fund to track the spot price of Bitcoin. We're talking BlackRock, the biggest asset management company in the world. It's obviously bigger than Goldman Sachs, bigger than Vanguard, bigger than Fidelity. It's BlackRock. I mean, the biggest of the biggest. And they have a really good track record of saying, we want to bring out a new kind of ETF. They typically, they get those approved. Coinbase would be the custodian, which would be great for Coinbase. And it's a pretty serious thing. The spot price, when you hear that, like, what's the spot price? The spot price is the current price. So if you look up a stock right now, it shows you $100 a share. The spot price is 100, right? So if Bitcoin is trading at $29,886.31, like it is now, that's the spot price. There are ETFs that follow the futures on Bitcoin, which say futures could be higher or lower than the spot price, depending on what investors think the future value of Bitcoin is going to be. That's futures. We're talking about the spot price. There is no, in the United States, spot price approved Bitcoin ETF. And this would be a pretty big innovation if we could get it. Now, I think a lot of investors would be enthusiastic about it. A lot of very smart people are saying that you should have a small percentage of your portfolio in crypto. I have my own view, rightly or wrongly, and I don't mind telling you, I could come to eat these words. I think crypto is BS. I think it's just it's a belief system. It's based on maybe conspiracy theories. We don't even know who created Bitcoin. We don't know who it is, or who they are, or who it is. Okay, we don't know. There's theories. There's rumors. Maybe it's something special. Maybe it's not. It's a bunch of electrons that are put together in a certain way. That's pretty hard to track, pretty hard to crack open, but it has been tracked. Okay, so I don't really see what the real value is. Yeah, but dollar destruction and the central governments of the world are printing too much money, ruining the currency. Well, if the currency is ruined, I don't think anything is going to be working. And I don't, Bitcoin, the way it trades at 19,000, 20,000, 60,000, 10,000, 30,000. It's not stable enough to be a currency. You can't, when you have your currents like your dollars, you could put them in the bank. You could hang on to your dollars while you need them, until you need them. So if I sell a house and then I buy a house, I have all that money coming in from the house sale, but I'm going to leave it in the bank because it'll be stable. A dollar is worth a dollar. And when I take the money out to buy a house, I've got the money. But Bitcoin is different. What if I sell my house for $800,000 worth of Bitcoin and I want to flip that into another home? Another Bitcoin is only worth 400,000. What the hell? I just gave up $400,000 of the proceeds from selling my house. It's. I think it's just way too volatile to be a currency. And as far as trading it goes, asset wise, to me, it's a highly suspect, highly susceptible, suspicious thing to me. It's very speculative. And you really need to go to this with your eyes open. And when people talk to me about it, I say, I don't give advice on whether or not you should own Bitcoin or Ethereum or XRP or Litecoin or any of the other ones. What I say is just make sure you're only using money that you could afford to lose. Because by and large, you're probably going to lose the money. And, don't go into it for the Sunday punch thinking that you're going to put a ton of money into Bitcoin and it's going to make up for all the years of poor financial habits and for all the years that you didn't invest money appropriately and save enough, but you're going to make it all back with crypto and everything's going to be great. I never see that happen to anyone. It just doesn't happen. So beware and don't get caught up in the BS. That's it for today, guys. Thanks so much for joining me. I'll be back tomorrow. I can't believe, well, actually, wait a minute. I'm not going to be here tomorrow. Tomorrow is my daughter's high school graduation. So I'll be back Monday next week. Something crazy happens in the market on Friday. I'll do a quick show. But other than that, I'll see you Monday. And thanks for joining me. Have a great rest of your evening. Bye.